one fund. On point for today, the expert to talk about it. Welcome to the ETF of the Week. Yes, this is the ETF of the Week, where we examine trending, new, newsworthy, unique, and intriguing exchange-traded funds with Todd Rosenbluth, the head of research at VettaFi. And at VettaFi.com, you'll find all the tools and research you need to be a savvy, smart investor in ETFs. Todd Rosenbluth, it's great to chat with you again.
It's great to be with you, Chuck.
Your ETF of the Week is
the Goldman Sachs ActiveBeta International Equity ETF, GSIE.
GSIE, the Goldman Sachs ActiveBeta International ETF. That's a mouthful with a few different things in there. So what's the driving factor behind this being ETF of the Week this week?
So we talked about international investing and one country in particular recently. You know, the Olympics have started. I think people are thinking globally and looking around the world for ideas and investment ideas in particular. And so this Goldman Sachs ETF does a great job of doing that. It is a multi-factor ETF. We'll dive into that in a moment, but it combines a number of different attributes to looking at individual companies and stocks. It does it in an index, low-cost way. The active beta is a way of just telling you that it's tilting on that traditional beta approach, and it's relatively cheap. So we think this Goldman ETF is worthy of more attention.
Let's dig into multi-factors because there are a few things going on here.
That's right. So there's a lot of research that shows that you can historically outperform by incorporating some of the following attributes. So quality, low volatility, momentum, and value in particular. But this Goldman Sachs ETF takes those four factors, which have historically outperformed the broader marketplace, and brings them together in one overall portfolio. So it's looking at individual companies across these various attributes, looking for the highest quality companies, looking for companies that are relatively cheap in terms of valuation, that have less risk from a volatility standpoint, and that have a strong relative strength. And I know that last part is certainly key to you and some of the listeners. So these factors have worked over time. We think this Goldman ETF does a great job of bringing those all together in one portfolio.
These factors have worked over time, but the research on factors typically suggests that a factor, value or relative strength or quality, applied correctly can do better than the market. But sometimes when you put a few things together, you get mud. I always equate it this way. Years ago, there was a time when somebody said, what's your ideal mutual fund? And I laid out some criteria. I mean, this was more than 20 years ago. And somebody said, okay, smarty pants, well, which funds do that? And I had somebody run those numbers because I didn't have access to the internet in these old days. And it came up with not a great list of funds, but a rogues gallery. Like, ooh, I wouldn't want that fund, or I wouldn't want this fund. So when you're putting all those factors together, you're not turning the rainbow into mud?
So I don't think that that's the case. So certainly individual factors have shown that they can outperform for a period of time. There's a certain time period where momentum does well. There's a certain time period where low volatility does well. What I like about this ETF is it's bringing the best ideas together in one portfolio. Now, this is intended to look somewhat similar to the broader marketplace and tilting towards these factors. So you will find many of those large cap companies that you'd find in a broad market cap weighted strategy, but you're going to tilt towards the companies that have the highest quality, or tilt towards the companies that have strong momentum characteristics. So this is intended to be, and I'm going to get ahead of where you might go in the future, a core replacement. This is perhaps a smarter way, a different way of getting your broad international exposure. Instead of having EFA or the Vanguard Developed Markets ETF, this Goldman Sachs ETF can be a great replacement. It's cognizant of the market developments instead of just owning the companies because they're large.
Before I get on to the question that you just set me up for, it's got active beta in the name. You know, if you put it in the title, the audience should assume it's important. Is active beta important to you on this fund?
So active beta is the way that Goldman Sachs is talking about. People have used the phrase smart beta or factor or fundamental oriented, as opposed to, traditional beta is just owning the largest companies within the benchmark in rank order in terms of size. So the MSCI EFA index, which is one of those benchmarks people are familiar with, own the largest companies because they are the largest companies. This Goldman Sachs ETF is going to hold companies based on their fundamental and valuation attributes. That's something that's important to us. So Goldman Sachs has a suite. There's a US version, there's an emerging markets version. GSIE is the developed markets version. So it'll have exposure to Japan, United Kingdom, Switzerland, France, what have you. Countries that you're going to certainly recognize when you're watching the Olympics.
And the timing of this presumably has more to do with markets than just the Olympics, because we have had some foreign central banks cut rates ahead of the Fed, et cetera. So is this also a call on where international investing stands right now?
So we find that advisors have historically have been underexposed to developed international markets. The U.S. equity market has been so much stronger for the last few years that if you had a largely strategic portfolio, you were tilted even more towards U.S. equities. So we think it makes sense, and certainly heading into a time period, as you mentioned, the interest rates are coming down. That could be a catalyst for some of these international markets. We think heading into the fourth quarter is a good time to be revisiting your beginning of the year allocation and making sure that you're tilted enough towards the international equity marketplace. So yes, the Olympics is just a reason for me to bring it up this week, because week after week, I've got to bring you and the audience another new idea. And I know you can appreciate how hard that is. There's 3,000 plus ETFs. We're going to highlight about 50 of them in a given year. But this is a good strategic allocation oriented ETF.
I like it, Todd. We should perhaps think of you not so much as the head of research for VettaFi, but as the flag bearer for ETF land. That could be it for you.
I'd be very happy to carry that flag for any ceremony that is being hosted.
Well, let's talk about the ceremonial position that this fund could hold in someone's portfolio. You have said this could be a replacement or an adjunct to a core. So in other words, if somebody's got a passive core, this would be your active piece, and split it that way. But if somebody already has core holdings internationally, is this so much of an upgrade that, barring significant tax consequences, you make a shift? Or, yep, you've learned about a new fund, it's interesting stuff, but you've got a core in place, you don't need more international with this as a core?
So I think this can be a alternative way of getting exposure to the international equity marketplace. It's well diversified, it's low cost for a fund that is not just buying the largest companies and holding them. There's a rebalance that's happening. Goldman Sachs is using its scale as an advantage. This could be a replacement for your MSCI EFA-based strategy. Now, again, you mentioned, it's worth repeating, tax consequences. There's not significant enough differences between this and your core MSCI EFA strategy to sell one and buy this, unless you're trying to tilt your portfolio to be smarter in the future. This, investors, advisors have gotten more comfortable with not just owning the largest companies, but having valuation play a role within a portfolio, having quality fundamental characteristics play a role in a portfolio. They're doing it mostly in the United States and not developed internationally. We think they should. GSIE can be a great way of doing that.
It's the Goldman Sachs ActiveBeta International Equity ETF, the ETF of the week from Todd Rosenbluth at VettaFi. Todd, great stuff as always. We'll see you again next week.
See you next week. Hope you earn that gold medal.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. And yes, that's me. And you can learn all about my hour-long weekday podcast by going to MoneyLifeShow.com or by searching wherever you find your favorite podcasts. And if you're searching for favorite exchange-traded funds, well, there's no better place than VettaFi. VettaFi.com has all the tools you need to be a better investor using ETFs. They're on Twitter at Vetta_Fi. And Todd Rosenbluth, their head of research, my guest, well, he's on Twitter or X as well. He is at Todd Rosenbluth. The ETF of the week is here for you every Thursday. Follow along on your favorite podcast app to make sure you don't miss an episode. We'll introduce you to another great ETF next week. And until then, happy investing, everybody.